After Bitcoin recently witnessed this phase of consolidation, we've just seen this bullish breakout. And so in today's video, we discussed whether this is actually sustainable, whether we're actually about to see a new bullish trend forming out right here. And so we're going to have a look at the most important technicals, macroeconomics, and also fundamentals. And so let's start right away with the technicals. From the technical perspective, we do see a structural breakout here. We have seen this breakout out of this resistance here. This resistance was valid due to the fact that we have seen those bounces off of it to the bottom several times here. But we've just recently had this bullish breakout, and obviously that is a structural breakout that also could actually end by retesting this blue overall trend line here that we do see marking those recent bottoms that we've seen. But overall, obviously, that is a bullish development that we're currently seeing here from the structural point of view. We could see this trend line here actually acting as resistance, so we might just see a bounce off it. But we do obviously now could also see another reversal from this resistance actually now acting as support, and so we could see a sustained trend forming out. We could obviously also have maybe some phase of consolidation and then a bigger crash to the bottom. But which of those two scenarios are actually likelier is a question that in our eyes, economists should be answered by macroeconomics and fundamentals. And so let's have a look at exactly those. By the way, if you like this approach of taking a look at the past cycles and learn from them, please make sure to subscribe to our channel and like the video so you don't miss future update videos, and also support us here on our channel. Thanks for your support. Now let's have a look at the US spot ETF net flows of Bitcoin measured in Bitcoin. And what you have just seen here is on 13th of January an net inflow of 8,560 Bitcoin, which is in dollar terms actually 808 million. And so this is quite significant. We have seen this actually topping out all of those recent bullish inflows, and so that is also one of the reasons we have seen this bullish breakout here. And if you now have a look at open interest, you do see that we have in the whole crypto market a open interest of 17.6% measured in a time frame of 7 days, and so that also is just beautifully illustrating what we are currently seeing happening here. We are seeing a structural breakout, but also the momentum is shifting. We are seeing volume, we are seeing open interest actually increase significantly. And why this actually happened? Well, we have to take a look at the macroeconomics to understand that. We have to take a look what happened in the past. And if you now have a look at it empirically, historically, what we at Kronos always like to do, we see massive similarities to what we've seen in 2020. We have seen those interest rate cuts, right? We have seen this transition at the Fed balance sheet, which is here in blue, from quantitative tightening to quantitative easing. And so the Fed balance sheet has been expanded. We're starting to see similar things happening right now. And also obviously with the interest rates, and that is obviously a bullish factor, and this might just obviously also have underlying reasons, which could for example be the global liquidity, which is starting to slow down. You do see that in the past we have seen two kinds of phases in the cycle. We have seen either a consolidation in global liquidity, or we have seen a expansion in global liquidity here in yellow. And that always coincided to those bull runs that we've seen here at Bitcoin. Obviously, Bitcoin is a really sensitive asset regarding global liquidity. But obviously, this recent weakness that we've seen here is due to this slowdown in global liquidity, and we have seen it actually reverse. And so there are two kinds of philosophies existing. You could definitely think about Bitcoin as being a risk sensitive asset. In other words, you need a really risk-friendly market environment, a risk-on sentiment, which is obviously true. We have in the past always seen that Bitcoin rallied after the S&P did, and so it is definitely really, really liquidity sensitive. But at the same time, many people do have the philosophy of it being actually like digital gold, and so obviously gold is also a risk-on asset, and so with liquidity problems, gold is often also a favorable choice. But at the same time, we do obviously have to take a look at global liquidity. And in the past, Bitcoin always had this positive correlation to it. And we are seeing those developments at the interest rates and at the Fed balance sheet due to the fact that we are seeing liquidity currently slow down, which actually also happened here in 2018, 2019. We have seen this massive phase here. This you could call it a bear market, or a if you have a look at it with a broader view, you can also say it's a phase of consolidation, which just ended in this Corona crash and this massive bull run that we've seen. But obviously, you do definitely see this liquidity sensitivity here, and the end of this massive consolidation here at global liquidity was actually marked by the interest rates and the Fed balance sheet, which is showing you that there's always those interest rate cuts are always happening for a reason, and we have seen this QT policy here. We have seen those interest rate cuts, and they have actually coincided to this um, to this bear market at first, but then to this kind of reversal here. It is always not perfectly also always co-aligning here, but we do obviously have this game theory reasoning that there is no reason for the Fed to cut rates, or that there is no reason for the Fed to start QE if there would not be a underlying problem. And due to the fact that we obviously measure the Bitcoin price most of the time in dollars, when the supply of dollars is increasing, and that is always having a bullish influence, and that's what you've seen here after the COVID crash. And we do believe that we are having structural underlying weaknesses in the U.S. economy. We could see a crash happening in the next few months. That's what we believe. Also concerning the geopolitical crises that we are currently seeing. And so we do believe that we should definitely be conservative also regarding Bitcoin. And in fact, we might just see similar things happening to what we've seen here in January 2019. Also, by the way, co-aligning in seasonality, but we do see that this small corrective movement here, or this this small push to the upside here, actually has also not really given Bitcoin a bigger breakout. We have seen this crash here happening next, and so we could actually also see some of things play out like this right now. We could see a continuation of this bearish pressure, of this bearish sentiment here at crypto. But overall, we do believe that in the next few months, after this crash actually happened and this inflationary recovery is actually started, which could obviously also take some longer, but overall, you should always obviously be quite optimistic due to the fact that Bitcoins can be printed, and that's the overall solution at this point. And whether or not we are actually about to see a continuation of this bullish breakout that we've recently seen here at Bitcoin, that is a question that obviously is only answered if you have a clear decision regarding the fact if Bitcoin is actually a flight to risk or a flight like a risk on or a risk off asset. But we do believe it has a similar job than gold. We do believe it's digital gold, and with those crises currently in the world, we do obviously also have this use case for Bitcoin again. But obviously, we have to take a look at interest rates. The last few times we've seen interest rates being cut, we have always seen a crash. We do believe in a crash coming next. Obviously, every asset, whether or not you take a look at gold or Bitcoin, every asset will probably crash. That's just the nature of what is happening. You do see liquidation events and so on. And so when we do see this crash, obviously at Bitcoin, obviously also, that might just be the perfect time to have another buy-in. Obviously, we can't tell you when this crash is about to happen. We can just tell you that empirically, historically, interest rate cuts and the beginning of this transition from QT to QE always coincided to a crash, and so it's definitely not a wrong decision to be more conservative at this point. I hope you enjoyed the video. I hope you find something informative. I hope you learned something new. If you did, please make sure to subscribe to our channel and like the video so you don't only support us here, but also don't miss the few next videos. Thanks for your support. See you the next time. Bye bye.